And regardless of whether the unlock actually happens, should this company sell its stake, the underlying business is extremely conservatively managed, and as I said, has one of the best growth records of any company in its sector on the JSE, and is trading at a big fat discount. And I still like the company, but I think the market has just gotten a bit disenchanted by the delays in the helium project and the LNG business. But the underlying project is doing quite well. And what perhaps some of your listeners will not be aware of is on the...
Hello everyone, welcome back to the FinMeUp channel. We are here with one of our most followed mentors, I think in fact most followed mentor on the FinMeUp app, Anthony Clark, also known as Smalltalkdaily. Today we're going to be looking at some of his top JSE picks for the year. On the FinMeUp app, he posted his insights and his reasoning and research and insights, everything you need about these picks on the FinMeUp app. So you can go read more there, get more information. We're only going to talk about 4 today as time allows us, but there are 8 or 9 picks if I'm not mistaken. So today we'll be looking at 4 of them. So if you want to read the rest, just go to the FinMeUp app. The link is in the description. Anthony, thanks so much for being here and sharing your knowledge. Let's get into it. So Kaap Agri is one of your top picks for this year. It's actually also one of mine. So I really hope it performs well. But we'd love to know why it's one of yours. Tell us more about why you chose Kaap Agri.
Sure. Firstly, Hugo, a very happy new year to you all and all your listeners. Let's hope it's a healthy and prosperous one for us all. I put out my top stocks for 2023 today. And just as a précis, I do this every year for my institutional clients, which is predominantly who I service. And last year, the small cap market was only up about 1.4%. And my portfolio, which at one stage was up over 20%, end of the year up about 5.3%. It did really well, and then Renogen and Sizwe basically fell off a bus. And in the second half of the year, it really nailed my performance. So I know that Renogen is very well followed by your app followers, and I still like the company, but I think the market has just gotten a bit disenchanted by the delays in the helium project and the LNG business. But the underlying project is doing quite well. And what perhaps some of your listeners will not be aware of is on the middle to the end of December, Renogen was actually awarded a very prestigious government concession called a special investment project, which means that anything that it does from now on has to be fast-tracked by the varying government departments. So they can get anything done within 57 days. Normally it takes 3 years, showing you that this stock and the energy it has in the Free State is in demand. But I'm digressing. I'm going to go back to our mutual shared pick, which is Kaap Agri. So why have I chosen it? Simple. It's a stock I've covered for the last 17 years. Coincidentally, it's also one of my top 5 largest personal shareholdings. It's a Western Cape-based agricultural business. It's changing its name in February to KAL Group, dropping its Kaap Agri name of 110 years to better position the company. It's actually a retail business. I nicknamed this stock many years ago the Burra Massmart, except that it does a much better job than Massmart, which is basically going bust. So what does Kaap basically do? It's got 4 distinct silos. It retails fuel across the country. It's one of the largest independent fuel companies. 25% of the business comes from traditional retail, 25% from convenience stores and QSRs, which is the likes of KFC, coffee shops, etc., at the fuel stations. And only 25% of the company now comes from what you would class as agriculture. It's had a fantastic long-term track record, a 15% per annum growth in earnings going back over a decade. And as I sit here, I chose the stock at 40 Rand 97. Earnings last year were 5 Rand 78, putting the stock at a price earnings ratio of 7. My forecast earnings this year is 7 Rand a share, and I see the PE dropping down to September to about a 5.9. That's the lowest rating I've seen for the stock in over a decade. Now, given the PSG unbundling last year, so lots of shares distributed to institutions and to underlying shareholders, the stock was basically down about 20% year to date because of a liquidity event. I see that as an opportunity to actually acquire the stock because fundamentally the company is inherently strong, is extremely well positioned, and this is a 4th successive year of solid agricultural results. So I'm anticipating Kaap is going to have another very good year this year. And as institutions start to look at the company and understand it's a retail business and not some agricultural company, the price earnings ratio below 6, I can easily see moving up to a 10 or 12. So I'm betting that as the market realizes that this company is not a farming stock, it's a retailer. You cannot get a retailer of this quality, with this consistency, with a nationwide footprint in areas of growth on a PE of 6. You'll be paying in the mid to high teens for comparative companies. Kaap is never going to get there because it still has an agricultural element. But at 40 Rand 97, I have a minimum target price of 55 Rand, and my ultimate target price, if I get my re-rating, is 64 Rand. So that's Kaap Agri in a nutshell. It's a really solid mid-cap blue chip business.
Wow, that's some proper upside potential. So what do you think of their fuel business? Because I actually saw a picture on Twitter the other day of, I think it was a farmer that had this massive Agri mark fuel tank because of load shedding for the generators. I have a great feeling about their fuel business going forward. What do you think of their fuel business? And they also acquired that PEG or PEG group. What's your take on that?
Yeah. When we did the PEG transaction for R1 billion in November 2021, the market was a little bit unconvinced as to why they were expanding their fuel network. But the PEG business isn't actually a fuel business. It actually owns about 43 sites on all the major highways, the N1, the N2. If you're driving from Joburg to Cape Town or Joburg to Durban, on any of the main highways, you will come across these huge service stations with restrooms and shops and fast food restaurants, etc., etc. They actually own those outright. So when you're stopping on the side of a road where you've got the kids and the wife in the car, the petrol isn't going to be the cheapest, but you've got nowhere else to fill up. The kids want a soft drink, the mother wants a pie, you want some cigarettes and a Coke. They do not charge normal retail prices. So 65% of PEG's business isn't exactly selling fuel. It's selling the services that go alongside you stopping at that fuel station to fill up your car. So you're going to the ATM, you're using the quick service restaurants, you're buying from a shop, etc., at above retail prices. And that's why PEG to me is a really, really good business. If you're the only fuel station within 50 or 100 kilometers, you are going to stop there and fill up, go to the bathrooms and go to the store. On the main fuel business, they have between a 3.5% and 4% now national market share, which might sound small, but they're one of the biggest independent chains in the country with over 100 touch points across the nation. They pump 600 million litres of fuel a year, of which about half is diesel, which is unregulated. But that's where Kaap really makes its money, because a significant proportion of that diesel revenue is called annuity revenue, where they actually have agreed contracts with major hauliers, trucking companies, and of course the farmers, who come to fill up with lots of diesel, given the farmers use lots of diesel. And of course now everybody's burning diesel in generators. So I think that going forward, Kaap's misunderstood fuel business is actually very well placed, not just for a travelling public, but because of a retail element and the annuity business from having large contracts to supply diesel to the likes of farmers and households who are now running generators to keep the power going and the lights on.
Very interesting. Let's get to your second company that we're going to talk about, and that is York Timber. This is not a company I usually read about, so very interesting to learn more about them. Why did you choose York Timber?
York is a very interesting company. If you go back a couple of years, this is one of I was going to say the crappiest companies on the JSE. And I pick my words very carefully. It was really cuck. For 10 years, the company had no dividend. It had a very volatile earnings flow, and the management incentive scheme was purely fixated towards net asset value. So here was a company trading at around rand 50 to rand 80, with a net asset value north of 9 Rand a share, with no earnings and no dividends. It was ripe for an activist to come in, shake the tree, change the board, and try and maximize value for long-suffering shareholders. And that's what A2 Investment Partners actually did. They took a 20% stake, and they eventually changed the board. They restructured the business, and the company, in the first year of activist ownership, saw a dramatic increase in profitability. Sadly, in 2022, it all went slightly wrong. Safcol, the state-owned timber company, couldn't supply enough logs to its sawmill because, as a typical government-owned business, again, it was basically not managed well, as every state-owned enterprise in this country seems to be currently. Secondly, they had extremely bad wet weather, which meant it was difficult to go into the forest to cut the logs and process them. And thirdly, for 3 months, dear old NUMSA had a really nasty strike where people actually died. And that caused a severe curtailment in the underlying profitability and operations of York. So the earnings collapsed last year. Now, York had a rights issue, which closed on the 9th of January. There's been a complete change in the material control structure of York. Previously, it was dominated by the IDC and the BEE Trust, which had no real incentive in getting York profitable or changing the underlying board or dynamic, because it suited them, even though they made no money in 10 years. A2 came in, they changed the chairman, they changed the board, and I foresee that after the rights issue, the company will be far more equally placed to start a material recovery. Why am I saying that? One, the balance of power has materially shifted inside York. As I said, the IDC and the BEE Trust were the largest shareholders. They owned 41%. They did not follow their rights. They've now been diluted down to about 27 or 28%. The activist shareholders bought all their nil-paid letters and followed their rights. They now, as of this morning, just under 30%. So they now have a power to engender change and significant operational change inside York Timbers. So I see 2023 as a year of restructuring, operational efficiencies, improved leverage, and recovery in the underlying business. So at R2.02, I can see an upside to R3. And don't forget, the net asset value is over R9 a share. And activists, by their very nature, want to unlock value. So at some point, that R9 will be unlocked. Not all of it, but if you go from R2 to R5, I'll take that money any day of the week. It's not going to be an easy shake of a tree, but the tree will be shaken. And I think in the next couple of years, you'll see a material turnaround in York Timbers. And that's why I've chosen it, purely on a change of control and the ability to actually engender change.
Very interesting. Thanks for that. That's definitely a deep discount to NAV. Getting to your third stock pick, and just before we get into the third stock pick, just a reminder to everyone, these are not financial advice. You must always do your own research when picking stocks or handling any money. So make sure you do your own diligence. And also, if you want to read more about Anthony's other stock picks for the year, it is available on the FinMeUp app. He also posts frequent content there. There are quizzes. Link is in the description. So getting to your third stock pick, and that is an education play. I know last year we actually did an interview. We'll also link that interview in the description about the 3 different education stocks on the JSE, which is Stadio, Curro, and Agritech. So one of your picks for this year is Curro. Why?
Yeah, I chose Curro late last year, again, for very simple reasons. The best stories are often very simply told. In 2022, many of your listeners will know that PSG Group decided to delist itself and unbundle all its assets. One of its largest assets was a 64% stake in private schooling company Curro. Once that news was announced, the share price was under significant pressure, because if you knew there's going to be 380 million shares hitting the market, you wouldn't want to buy the share in the market. If you're a professional hedge fund manager or somebody who actively trades the market, you would short the stock, hoping to buy it back at cheaper levels, and that's exactly what happened. Curro started last year extremely well, and then PSG came along and the stock fell in a heap. I think from memory it was down 25% last year in round numbers. However, there was a strategic change in the management structure last year and the direction of Curro. For many years, the market had bemoaned the fact that they were spending billions of rands of our money just building lots and lots of schools and not properly filling them. They were just building a huge real estate empire. They suddenly realized that the market didn't quite like that, because the earnings were not coming through from this entire expansionary project. So in the middle of last year, they decided not to start building any more schools, but to focus on what they had and to start filling them. And filling them with learners who could actually pay their bills. So many learners sadly had to leave the system. But as of the end of the year, they had 71,000 learners. So Curro remains the largest independent private education schooling company in this country. And they're still picking up organic learners because, as we all know, the state network and the state education system, as we've seen on Twitter, where people haven't gotten their children into school this year, continues to fall down. So Curro at the interim stage saw a 42% rise in interim earnings, so recovery in earnings after 3 years of very weak and really sort of rubbish earnings actually recovered. And I'm forecasting 53 cents to the year end December 2022, which is a growth year on year of 29%. Now, at the chosen price of R9, that places Curro on a P of 17, which is now much more in line with its rivals of Advatec and Stadio. If I am right, and the earnings momentum from this year onwards starts to gather steam, and Curro then starts to see an unwind of its PE ratio down to what I would call, the excuse me, the early to mid-teens, it starts to look like a very attractive growth play. The last real caveat for me is the real capex peak in Curro comes in 2024, 2025. So they have R2 billion of our money left to spend, which they can fund themselves. They don't need any more rights issues. Once that spending has been completed, they will have an unrivaled nationwide schooling network in primary and secondary education. They do not expect to build any more schools after that, just expand classrooms as needed, which means annual capex will fall from R1 billion plus to between 400 and 600 million rand a year. That will free up significant working capital, allowing debt to be repaid and material dividends, again, to be paid to shareholders. So excuse me, I believe that Curro is on the cusp of the vaunted J curve, where earnings will start to turn up, debt will start to be repaid, and dividends will start to flow. So at R9, it may take a while for the market to understand what they're doing. But I think in 2023, the market will suddenly realize that the game has changed at Curro, and they're going back to growth and earnings rather than just expansionary growth. So at R9, I see upside, and I have a very bold target price of 16 Rand. And as an additional tidbit, I chose Curro as my stock of the year in the Financial Mail, which should be coming out probably in the end of January with its stock picks for the year. So I chose it first, and the Financial Mail got to catch my coattails. So 16 Rand may be a very bold price, but I can see the stock getting there in the next 12 to 18 months if my strategy of focusing on growth and earnings actually occurs.
Definitely high conviction, and we'd love to follow Curro's journey. And it makes sense with education. It takes a lot of initial investment, and once you have the infrastructure, you have the accredited courses, or all the subjects, all the content ready, all the systems, then it becomes a very lucrative business. So let's follow Curro this year. And now getting into your final pick, which is something a bit different. It's not, I think, well known, because it is not actually listed on the JSE. It's listed on the Cape Town Stock Exchange, and that is Assupol. Please tell us more about Assupol, Anthony.
Yeah, I chose Assupol, again, one, because it's not properly covered. I think I'm probably the only person that keeps an eye on it, aside from a couple of astute journalists. Now, Assupol, if you think of its name, it's quite logical. The company was started in 1913 as the assurance company of the insurance company dedicated to providing services to the police. So they did insurance, funeral policies, pension benefits, etc., to the police service. Fast forward 100 years. Assupol, as it's now commonly known, is trading on the Cape Town Stock Exchange at 9.25, and is one of the largest providers of life insurance policies, funeral policies, and other defined benefits within the Greater Government Employee Network Scheme. Now, the government employee system in this country is called PERSAL, It employs, I think from memory, about 1 million to 1.5 million people, of which Assupol has a 25% share of that captive market where your payroll is deducted every month to give you medical aid, pension benefits, funeral policies, life insurance, etc., etc. So, as we know, one of the only places in this country which has seen employment growth in the last 2 years has been government, because they just love to hire people to do nothing. And Assupol has been providing them with services and financial services, and it's been growing very, very fast. As I said, it's the fastest growing company of its ilk in the country. Now, the real interesting part of this is that there are other companies listed on the JSE. For example, a Clientele Life will be a company that many people may know, with the adverts on TV regarding funeral policies, legal services, etc., etc. Assupol trades at a 45% discount to its comparative JSE competitors. So you're buying the company already at a big fat discount to companies you can already buy on the JSE. This discount to me is purely due to the fact that the stock used to be over the counter. It's now traded on the fairly illiquid Cape Town Stock Exchange, although you as an individual can buy shares in the stock by going into the Cape Town Stock Exchange website and opening an account with A-Trade. It's quite straightforward. It's a digital exchange. And because of that low liquidity and the fact it's not well covered, the stock is just out of sight. Now, there's been a very interesting development in the last couple of months. The largest shareholder in Assupol is a financial services company called BUD. Now, that has been taken over, let's say, by a very large, well-known investment bank, which perhaps has a zebra as its logo. I understand that the asset is not core to its business, and they might just dispose of it. And if they do dispose of it, there could be some significant value unlock in Assupol as this potential new shareholder exits the company and reinvests the money into other areas. Now, I see Assupol as being a strategic asset play, a special situation, and regardless of whether the unlock actually happens, should this company sell its stake, the underlying business is extremely conservatively managed, and as I said, has one of the best growth records of any company in its sector on the JSE, and is trading at a big fat discount. So I can see Assupol probably being worth 14 Rand a share. The whisper number is 16, but I'll stick with 14 Rand a share. So regardless of corporate transactions, the underlying business has got a really good, solid track record, and it's just a business tied into the government employee system. So it's like PPS or Clientele or any of the other services. It just happens to be tied into government, and government currently is the only place that is actually making money and employing people. So I think it's a fairly cast iron, albeit slightly speculative, small cap listed on a smaller exchange. So those here are my four. All the other 5 companies will be on my report, which, as we discussed, will be on the FinMeUp website when this podcast goes out to the wider market, probably early next week. So log into FinMeUp, look me up, and read the report. The full 11 pages will be on the link there for you to read in its entirety.
Awesome. Thanks so much, Anthony. Definitely reading that article, already read it, and really looking forward to follow you further this year with all your updated insights as the year goes on. So as you said, it's on the FinMeUp app. The link is in the description, and if you found this video with the 4 picks insightful, please consider liking and subscribing to see other mentors and their picks as well. Let us know what your picks are for this year. We'd love to see in the comments. You can pick 4, 5, 6, or even just 2 shares. We'd love to know what you're following and love to look into that. Join the community. Have a great day, and thanks so much, Anthony. Cheers.
Hey everyone, it's John here. Take a moment and click the link below to sign up to our Stock Pick Challenge. As you can see, we're still optimizing and improving this spreadsheet. If you want to see anything else on the spreadsheet, comment below. And then if you want to also have a copy of the spreadsheet, sign up to our newsletter, and then soon we'll send it out. Cheers.